Hello everyone and welcome to this CMC Monthly Insights video presentation where today I'll be looking at Europe, the market action and movers over the course of January, and a look ahead to February to see what might shape the market action for traders. So looking over the month of January, generally a pretty good month. Now naturally the global news flow was dominated by potential policy being announced on the run out of the US President's office, with the President-elect taking his position on the 20th of January, and not a great deal of detail coming around the market. And that did help shape European trading, though of course there were European specific events. We kicked off the month very strongly, which was just as well because most of the continental markets had rallied very strongly into year end. When we saw a good round of manufacturing PMIs, many of those markets were able to go on with it, and in particular the Euro 50 indicating strength across the continent. The FTSE also went with it to some extent, but at the middle of the month we had the announcement from Theresa May that she would be prioritising control over immigration over membership of the single market. And that saw many of the gains, particularly for sterling and for the market in England, the FTSE 100, drop away quite substantially. Sterling strengthened in response and the euro weakened as people, not just in the UK but across Europe, mulled the hard realities of a Brexit and repriced some shares particularly accordingly. Bonds were fairly steady. After that mid-month disappointment, we did see many markets pull back from highs, but the share markets and bond markets were fairly steady for the second half of the month. We did see pressure once again emerge on sterling, and we will be looking closely also at the euro. It's pretty clear that those strong manufacturing reads we got were at least partly driven by a much better currency position for many of the major economies on the continent. We'll be looking forward to see how they pan out in the near future. Politics is having a large impact on markets at the moment and will likely continue to do so. And it's not just the US elections that are driving markets, particularly in Europe. The talk around the Brexit ahead of a 31 March deadline to trigger the process of leaving Europe for Britain will come into effect, and it's very likely we'll hear more about negotiations and different positions taken by the various parties that could very well affect markets. It's quite likely we'll see some movement in business, and although Brexit may turn out to be strongly positive for Britain in the longer run, we could see some short-term nervous reactions, particularly in the FTSE 100. But of course there's more politics that could affect markets. We'll have many of the major economies across Europe having elections this year. We'll kick off with Scandinavia. In Norway we'll see elections. In the Netherlands we'll see an election in the middle of March. Of course we've got an election in France coming up in May or April perhaps, and one in Germany in September, as well as a number of other nations. And so the potential for politics and policies to really move markets is heightened in 2017, particularly for Europe. Now given the rise of the far right, or the alt-right as they like to be called, in many nations, it is likely to be quite fraught, and we could see some very robust political discussions that spill over into economics and have impacts on trading. So one to watch out for. A lot of these of course will come from left field, but of course with the election dates known, as we approach those dates, the economies in question will come into focus. Turning now to the calendar, we've also got a lot of events that could drive markets. And kicking off early in the month, on the first day of the month, we'll be seeing PMIs from around Europe, and as well as a European-wide reading on manufacturing. Now these are important in light of the strength that was displayed at last month's read. And markets reacted strongly. Share markets in particular rallied after all of those readings showed manufacturing in Europe to be firmly into expansion territory, with most coming in between 52 and 55. Now if those same indices, those same manufacturing PMIs continue to show that ongoing expansion, that's likely to add to investor confidence, and we could see strong reactions, particularly in shares, and particularly those that don't trade across the channel. We could see real investor support for them, so one to watch out for. We move to the second of the month where we'll have a Bank of England meeting. Not expecting to see any change in interest rates there, but we are likely to hear supportive statements and news that the BOE stands ready to take action if required. Then into the middle of the month where we'll see some very important reads on GDP. These will be the initial flash estimates for the last quarter of 2016, and if they show an acceleration in growth in line with what we saw in manufacturing indices, once again that could be very supportive, particularly of share prices, but also of the euro. And if we see it repeated in Britain, also the pound. So certainly middle of the month, the 14th, is a night that could be a very interesting one for traders. And then moving through, we'll also see CPI readings out of many of the major economies, as well as European-wide read. Now, if we see a lift in inflation there from the current annualised rate around 1.6%, once again, that could be cause for confidence. Of course, if we don't see any movement on that, but we have seen a pickup in growth, markets might start to worry about the fact that that growth is not feeding through to prices. So one with a little bit of subtlety around it, and one to watch very closely. And then at the end of the month, we'll be looking at a consumer confidence read across Europe. Now, this is very important. Politics have had a big impact, not only on the public discourse, but on the actions of investors. And if we see that consumer confidence continuing to rise, that might also give traders a pointer as to what's going to happen with share markets in Europe and in the UK over the course of the next month. Turning now to some of the key markets for February, we start with the Germany 30 index, tracking the DAX. And as you can see from this chart, it has basically traded sideways for all of January. And how it reacts as we head into February will be very important, not just for investors in Germany and those invested in the DAX, but because it's also a key driver of the Euro Stoxx 50, the main indicator for the continent's bourses. And so we'll be watching the DAX very closely. Now, it's been trapped in that range essentially between 10,400 and 10,700. So the first signs that traders might want to start getting actively involved for a directional trade would be a breach of one of those two levels. And in particular, a fall through 10,400 would bring a lot of territory and a lot of resistance and support levels back into play. On the upside, there's still plenty of room to move. The German market nowhere near the highs struck just over 2 years ago, but still with plenty of potential. On an evaluation basis, we wouldn't argue that the Germany 30 is expensive, although it's not cheap either, but its valuations do reflect the still easy monetary conditions that we're seeing in Europe. Across the ditch in the UK, the FTSE 100 traded strongly for the first half of the month, and in fact was one of the best performing markets in the first 2 weeks of 2017 in Europe. That performance, however, came to a dead halt over the weekend of January 13 to 16 as Theresa May's comments on her prioritisation for Brexit started to hit the market, and we did see a change in investor sentiment and the FTSE slide away. But of course, the major market, the one most Europeans are watching, is euro sterling, the currency cross between these two key currencies. With the UK now leaving the EU over an extended period, it's one of the good barometers. And as you can see, it too has been doing some real work, and in fact mirrored a lot of the moves that we saw in the FTSE in particular. So a rally in that first couple of weeks for euro. Sterling was weakening. It looked like everything was on track. And then when we heard Theresa May's comments, we saw that reverse, and euros weakening and sterling strengthening. Now we're sitting just above the 86 pence level, and this is a key support level. If we do see a plunge through that level, that is euro weakening, sterling continue to strengthen, it might signal market sentiment is shifting against Brexit. On the other hand, and what does appear quite likely, it could bounce off this 8600 level and resume the upward trend for euro, the continued weakening of sterling. One to watch, and certainly not just as a trading opportunity, but for information about how investors and traders are seeing the European situation.